What's up, guys? Welcome back to another video. Today we're going to talk about the world's largest company by market cap share, and that would be Apple. Full disclosure, I'm editing this video on an iMac. I use an iPhone. I own Apple stock, and it's just miraculous what this company has been doing, especially the last 6 months. And they just announced a stock split, and if you're not familiar with what a stock split is, you have, for example, one share, and they just split it in half. It neither creates nor destroys value for the company, but Apple and other companies do this because they want their share price to look more affordable or attractive to investors. If you had managed to buy Apple shares at the low dip point on March 23rd, then your shares appreciated 104% over the last 4 or 5 months. And Apple has split their stock before in the past. They split their stock on a 7-for-1 basis June 9th, 2014, and 2-for-1 on February 8th, 2005, and then again on June 21, 2000, and June 16, 1987. So they've been pretty proactive about keeping their share price manageable looking. And it's easy to see why a company would want to do this when you go on websites like Robin Tracker and you look at the companies that retail investors, small dollar investors, people with maybe only $10,000 in their brokerage account, what do they like to buy? They like to buy small dollar companies. You know, Ford is selling at $7, GE is selling at $6, CCL is trading at $15. Let's see, GoPro is trading at $5. It psychologically makes much more sense to someone that a share price could double from $5 to $10 as opposed to $400 to $800. So on July 30th, Apple announced this 4-for-1 stock split, and if you're not familiar with the dates, at the close of business on August 24th, whatever shares of Apple you have, those are the shares that are going to be split. And the split adjusted basis will reflect in your brokerage account on August 31st. Now, when I heard that, I wanted to investigate whether this was a good opportunity to buy or potentially sell right before the split. So I kind of wanted to look what happened the last time Apple did this. This is an article from, let's see here, April 23rd, 2014, when Apple announced a 7-for-1 stock split. So their share price was around $6.80 at the time. And shareholders of record as of June 2nd will receive 6 additional shares for each share of Apple, and the split adjusted will reflect on June 9th. So if we go on Yahoo Finance and we look at how the share price interacted in March, April, May, June, July of 2014, you can see it was hovering around, the share price was $6.80 or so. It's been cost adjusted for the graphs for continuity. But this is the dates. Here we go. Let's see, April 23rd. April 24th, April 25th, and then boom, it jumped up on April 28th. So was that the date of this article? April 23rd. So let's see, April 23rd. So probably at the end of closing, it then gapped up on the 24th. So it jumped from $74 to $81, $84. It went up to $84 really fast. So that's like a 12, 13, 14% increase on the news that there was going to be a 7-to-1 stock split. And the record date was, let's see here, let's confirm this. The record date, June 2nd. So you needed to hold the shares on June 2nd. And let's see here. Yeah. So at the beginning of trading, it then went down. So it actually dropped a little bit the day before. And then it went down, so it was at a high of a little over $90 and then only went down to $89. So it barely dropped at all. My logic here was, well, if announcing a stock split inflates the price, will people then just sell off their shares or a portion of their shares once they get that 7-for-1 or 4-for-1? Is this a good time to buy Apple and then sell it right before the split? I'm trying to figure out, does this actually benefit traders who don't care about getting more shares, who don't care about the splits? And from what you see from this graph, it really doesn't. Apple's share price continued to rise as it always does. And the reason why stock splits are viewed favorably by investors is because this is new information. Apple would not be splitting their stock if they thought that there was going to be bad news that might cause their stock to decline. They're not going to do a 7-for-1 or 4-for-1 when they know something that might drop their share price by like 30 or 40%. So if they were to split it to get it down to $100 per share, then there's bad news coming, bad sales or delays in products being launched that would cause their share price to decline. They don't want to do that. They don't want to make it look bad by going down. And when we review the graph for what's happened the last 2 weeks, on the 31st or the 30th, they announced the 4-for-1 split. The share price was at $384. It then shot up to $425. Once again, more than a 10% increase in a single trading day. And it's always after hours that, people snatch it up because they know it's good news. And then it just continues going up. I was thinking, I own some Apple shares, and I was thinking, well, what if I sold right before the split and then bought back in after the split? I don't think it matters. I think Apple's share price is going to continue to increase if you just hold. And the reason why is Apple has been aggressively buying back shares. So if you go on this website, Macro Trends, and then you look at shares outstanding of a company, I really find this information useful because it shows how many outstanding shares of a company there are and how it's been changing year over year. So at some point, in 2006 through 2013, Apple was issuing new shares in order to raise revenue. They needed more cash. However, mid-2013, they flipped the script and they started buying back shares. They basically destroyed existing shares, and then this made the outstanding shares, by all the metrics, by all the standards of evaluation, more valuable. So this graph, if you're having trouble reading it, is the amount of shares outstanding by billions. So on June 30th, 2013, there were 6.47 billion shares in existence, and over the last 6 or 7 years, Apple has gotten that down to 4.355 billion shares in existence. And even with the economic slowdown, downturn, is it even really a recession anymore? Year over year, when you look at this chart, there are 5.35% fewer shares of Apple in existence today than there was a year ago. So if you had bought Apple stock a year ago and the metrics, the valuation, everything for the company remained the same, your shares are 5.35% more valuable compared to the equity in the company simply because they've been buying back shares and making your existing shares more valuable. And I honestly think Apple, with their cash flow and their reserves, is going to just keep doing this. I think by splitting the stock, all of the numbers will change, obviously. So if it's a 4-for-1 and there's, let's see here, there's 4 billion shares in existence, there's about to be about 17 billion shares in existence. However, they're just going to keep grinding along with their cash flow and buying back shares in order to make the company per share more valuable. And just as a fun aside note, when you look at Tesla stock with their stock split, Tesla is still increasing the number of shares in existence. They're still saying, we need to raise cash, so we're going to issue new stock, and they think their stock is overvalued, so this is a good time to issue more shares. Now, of course, Tesla is raising this money and investing it into the company, and their shareholders believe that in the long run, it'll make the company and their shares more valuable, more profitable. We'll see. I'm interested to know how that's going to work out for Tesla in the next couple years. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, if you own Apple stock and you're thinking about buying more, or potentially you're thinking about selling, let me know in a comment down below. I love hearing from you guys. And if you haven't subscribed to my channel, consider subscribing. I talk about finance and investing. And until the next video, take care.